Charlie Munger says that the greatest investing mistake of his life was a friendly broker called him in 1977, and offered him 300 shares of an obscure pink sheets company called Belridge Oil, which had a very large oil field in Bakersfield, California. And Charlie was familiar with this company. It was very thinly traded. There wasn't much disclosure, but he knew that at the price he was being offered those shares, at that time, I think the market cap of the company was something like $120 million or something. And the dividend yield was like 15%. It was very cheap. And Charlie said that without even doing much of an analysis, you knew that you were buying it for 1/5 or 1/10 or less of what the actual underlying assets were worth. And it was quite a remarkable field, and they owned the land. It wasn't a lease, and they owned everything underground. And so he bought the 300 shares at $115 a share that were offered. And then 2 days later, the broker called him back and offered him another 1,500 shares of Belridge Oil, again at the same price. This time, Charlie didn't have the cash handy, and he would have had to sell something to buy Belridge. And he should have sold, because whatever else he owned in his portfolio was not a 20-cent dollar or something. It was not that cheap. But it required him to sell something and then raise the money and then buy. And he called the broker back and declined. And he said that, so 2 years later, this 100 million market cap company was bought by Shell Oil for $3.5 billion. And it was like 30x or something, 120 million or something. So it was a 30x in 2 years. And at that time in 79, Berkshire Hathaway was trading at about $300 a share or something, which is now approaching $500,000 a share. So if you think about Charlie's 30-odd thousand he put in, it became $1 million in 2 years. And then it was another probably more than 1,000x, more 1,500 or 2,000x from there was the journey from Berkshire. So that million became something like $1.5 billion today. So the 30,000 in effect became $1.5 billion, 35,000. The 1,500 shares that he took a pass on would be worth something like $7.5 billion today, which I think exceeds his total net worth today. And this is the kind of like I would say, or what would I call it? I would say it's the cross connect, where you take the first company and you get a 30x. And then you take the second company, and in his case, he got a 1,500x. So you end up with 45,000x, some crazy number like that. Buffett actually went through in the 1950s, he went through something known as the Moody's Manual, which listed all these companies. There are 4 companies on a page, very thin pages, big thick books. And I bought a couple of Moody's Manuals on eBay a few years back just for nostalgia's sake. And but he would go through each company, and there were thousands of companies. And they just had basic balance sheet and income statement data. And he ran some classes with MBA students a few years back. And he would find a company where the earnings were $15 million a year and the market cap was 25 million, things like that. Just things that made no sense. And when he found these things that made no sense, then he would dig into those. And he did really well. You know who we are as humans at the age of 5 and who we are at the age of 95. There is no change. Basically, our personality template, our traits, our likes and dislikes, who we are, is pretty much hard-coded at the age of 5. And between your genetics and your experiences in the first 5 years of life, that die is cast. And after that, there's not going to be any change. Buffett, when he was a young teenager in Omaha, he used to go to the local racetrack, Ak-Sar-Ben, which is Nebraska spelled backwards. And what he'd do is after all the races had been run, he'd collect all the tickets that people had discarded and thrown on the ground. And he'd collect them all, he'd bring them home, and he'd go through each one carefully to see if some drunk guy had thrown away a winning ticket. And lo and behold, he would actually find a few tickets which actually were winners, but people had thrown them away. And then because he was underage, he couldn't go to the window to cash it. So he would send his Aunt Alice with these tickets to cash them in. And so the kid who was doing that at the age of 12 was the same kid who at the age of 26 or something was thumbing through the Moody's manual in 1956 or 57. And one time my friend Guy Spear and I visited his office in Omaha. I think this must have been like 2010 or 2011. We used to go have lunch once a year with Buffett's assistant, Debbie Bozanic. And we paid a good amount of money to have lunch with Buffett. But quite frankly, the lunches with Debbie were a lot more fun. And I learned a lot from Debbie. And one year, I think 2010 or 2011 or thereabouts, we had gone to have lunch with Debbie. And when I went to the 14th floor of Kiewit Plaza with Guy Spear, Warren was standing right at the elevator, like to receive us. We didn't have an appointment with him or anything. And he says to us, would you like a tour of headquarters? I said, Warren, if you want to hang out with a couple of yo-yos, it's perfectly fine with us. We've got nothing to do twiddling your thumbs. And so he gave us a great tour of the headquarters, showing us all the mementos and different things. And then he took us to his office, his private office. And there I saw on his desk the Japan Company Handbook, which is basically just like the Moody's manual. It's like value line for Japan. And they have 2 companies on one page, lists every Japanese company. And he was thumbing to it. Now Berkshire's managing tens or hundreds of billions at that point. And you can't be playing these Mickey Mouse games with the Xarban tickets and stuff. So I had actually been going through the Moody's manual, just coincidentally, the Japan Company Handbook, just coincidentally, before I actually went to the office. So I took his copy of the Japan Company Handbook and I said, Warren, I'm going to like dog ear some pages that I found interesting that you might find interesting. Now, I don't know whether he was horrified that I was taking his Japan Company Handbook and mutilating it, but I just went ahead and did that. And a lot of the companies that I thought were these super cheap companies, statistically, were towards the back of the book. He says, yeah, what I found is the good stuff is always at the back. And so the kid at 12, the kid at 26, the kid at 81 or 82, it was the same kid. No change at all. And the kid today is the same too. So Munger would say, when you say, oh, this is so much work and this and that, Munger's answer would be, why should it be easy to get rich? Why should it be so easy for you to find the 3-cent dollar bill? But what I'm here to tell you is the 3-cent or 2-cent or 1-cent dollar bill is sitting there. It's there today, it's there tomorrow, it's there 5 years from now. The only question is, how determined are you to find it? And how many pages are you willing to flip? How many rocks are you willing to turn over?